Okay, so I'm just gonna post this for the Discord group today. Okay, so first of all, we're gonna talk about what a trailing stop is, but it's gonna get really detailed. I'm gonna start talking about chandelier exit and ATR and how it relates to trailing stops. So you guys can hear me. I think the quality is pretty decent here tonight. It's my first time using YouTube in a long time. All right, so an ATR is this. It's not like a new thing. It's something that I've been using for a while. I just haven't really talked about it because I'm developing a strategy, and I've always used different methods of stop losses. But I figured it's time for me to implement it into the group because you guys are pretty bad at stop losses. So it's come up with a really good strategy that's gonna tell you exactly what the fuck to do. And when you're in profit, it's also going to tell you where to stop yourself out in case you do things like, okay, how many times have you guys been in a trade and you're already winning and then it reverses back and you just let it ride back to zero and then you lost all of your profit when you could have taken some profit, right? I bet you guys have all been there. I've been there a lot. So what is going to end up happening is a trailing stop is going to allow you to take some profit. And that's what a chandelier exit indicator does. It allows you to, it ensures that you can have some profit. And it uses the ATR. And the ATR is the average true range of, it measures the volatility. Hold on, am I in public right now or am I in, I meant to make this private, not public. Oh, it's public. Okay, well, it was only supposed to be for the Discord group, but you guys can join me as well for the public today. So thank you very much for joining me. Today, we're going to talk specifically about how you could have capitalized on Sol, Kava, and Alpha. And for the people that are not in the Discord private group, you guys are welcome to stay, and you're probably going to learn a lot as well. These are what the paying members are getting. Like, they're getting a live stream every day with tons of lessons. So first of all, the indicator that you might want to probably put on here is right here. It's called the ATR. It's the first one that comes up under technicals. And the second one is called the CE. Sorry, chandelier exit. By Everget. Okay, it's by Everget, the one that has the most. And I'm going to explain to you guys today how, if I was actually available, because I didn't sleep till like 9 in the morning and I didn't get up till 6 p.m. So I literally missed everything. But trust me, if I was here, I would have made like 10 grand today. But unfortunately, I was sleeping, so there's not much I could have done about that. Okay, so first of all, when you have it on here, I'm going to remove all of these EMAs. I've been a big fan of it. When you set your ATR, it's going to be down over here. Okay, set into like somewhere in the bottom. Make sure that the number is visible. Okay, I like to double click on it, go to style, and then this one here, the trading value indicator should be on. I don't know why it's not on, but it's over here. That's fine. It tells you the ATR value on the bottom left. So it gives you a measure of the volatility, okay? It takes it does some calculations and it gives you a measure of the volatility, not of the actual price itself. It's different than EMAs because EMAs give you the price of only of the average price of it. So if it's a 50 EMA, you're taking the previous 50. So go to your indicators. Once again, I know that it was closed. Choose your ATR. Okay, that's the first one right there. And the second one is chandelier exit by Everget. So you got those two on. Make it a really bright color. Okay, make it like a pretty bright color. You know, something like thick and at the bottom. So the simplest way to read this is if it's increasing from low to high, that means that there's massive volatility. As you can see today, this volatility that we're seeing from the beginning of the third to the top over here right now, it's volatile. It also depicts when the market started to get volatile as well. But if you notice that the curvature is starting to change, so it's starting to slow down right now. And it's just like other time frames when you're reading RSI. Okay, when you're reading RSI, man, I'm in a bad position right now. I'm shorting Kava. I'm like in a $240,000 position right now. I've been in this trade for a while, honestly. I tried shorting it on the break of the bottom. So I'm up about 1,000 right now. I was up like 2,000 earlier on another trade. And do you guys see this? Hang on. This is Hunter. He's my munchkin cat. He's 2.5 kilograms and he's full adult. He's fucking really cute. And he's got a sister, Coco. And we bought them for $5,000 for 2 cats. Freaking crazy, crazy. The things that my wife wants sometimes. 2 cats for $5,000. What the fuck? So anyways, so the reason I entered Kava, just to explain quickly, is because of this right here. It was breaking it, and then it didn't quite break down. And I'll explain to you guys exactly what the ATR is and the chandelier exit in full detail. And it's something that's going to stick with you. You're probably going to use it for a long time. It's going to be my new course coming out, like the 3-hour version. The new course is like $100 something for 30 hours of new content. Probably going to want to get it. Okay, so first of all, the chandelier exit is right here. I would just customize it to this. You can screenshot it if you want. You don't need all these other crap here, like the buy signals, the sell signals, you know, like you don't need all that on here. It just clutters it. So that's just the way that I like it, and that's the way I'm going to keep it. I like to have it green and red and it fills in slightly. Not only that, okay, I don't like the buy and sell labels. I keep mine on 14 and about 2.5 usually, okay? 2.5 is my default that I like, but oftentimes I'll change it to 3 as well. Like today, I'll change it to 3 and I'll explain why, okay? So the way that the ATR works is at every given point in time, it takes the previous 14 bars and it tells you the average volatility, okay? And then it gives you like kind of an average, like a moving average, but it's measuring the volatility, not the average price. So don't mistake in that. So as the ATR increases, the chandelier exit will increase as well. And these chandelier exits, it tells you the price of the ATR, or sorry, it tells you the value of the ATR at that given time. So as you can see, it almost acts like a trend line, right? A trend line. And then because it's been volatile in a steady rate, it keeps going up and up and up and up. But eventually, the volatility is going to break and it's going to turn the other way, right? And that's what the chandelier exit gives you a gauge of. So it can act as a support and act as a resistance. So just as an example right now, the reason I enter this trade is because of this. Is because if you take a look on the volatility, ever since the morning, ever since down over here, okay? This is where the major rally after this first wave happened. You're usually not going to catch the first wave. You're never going to catch it unless, you know, you're just happen to be there at the right time. But professional traders, they don't go into these trade setups in the first one. They go into the third one. And then or this could even be the third here, and then this could be the fourth here, and that could be the fifth there. That's most likely the count. So I'm going to hover like up and down. I've been up and down like 1,000, 2,000 for this trade. I'll keep you guys updated throughout this whole trade of mine as well. Hoping to take a really good profit on here at around 61. So for about 7,500 profit I could make, assuming things go right. Okay, so have you noticed here, on every single time frame, the chandelier exit will look different. So you want to look for a time frame that looks good, just like an EMA. Like if I go to 30-minute time frame, it's not going to show much. You want to find something that's going to hover very close, just like an EMA. Okay, let me give you a really good example of what you want to look for, like an EMA, just like on the chandelier exit. So let's say you're going back to the bull market back in 2017, okay? Way back in 2017. Well, there's going to be one EMA that's going to look a lot better than others. And let me give you a really clear example so you understand what I mean. So the yellow line is a 55 EMA, right? This one looks really, really good, right? On a 2-day. Probably the best one. But if you go to one like a 4-hour, it looks too choppy, right? It looks really choppy because sometimes it's above it, sometimes it's below it, sometimes it's above it, sometimes it goes a little below it, right? So it's not the best one that you want to look at. Too much above and too below. Let's see the 8-hour, for example. Well, this one cuts down too far below it. You want to find one that's really steady, that barely hits it. Let's just take a look at the daily. The daily is decent, right? It's pretty darn good. But if you took a look at the 2-day, this one's probably one of the better ones, okay? This is a really good one to take a look at. So let's just say we apply the same concept to something like Kava. Okay, so we go to Kava, and then we take a look on a 5-minute time frame, but this time we apply it to the chandelier exit instead of the EMA. You'll see that this is very steady. It bounces every time. So for example, when this formation happens already, what you want to look for is you want to look for a break. You want to look for a break of the high. Okay, you're probably not going to catch this breakout. Rare, very rare that you'll catch this breakout. This is not where professional traders enter the market. Okay, they don't enter it on the breakout for wave one usually. What they'll do is they'll wait for a breakout to happen, find a really good ATR that's supportive, and then they'll enter it on the bounce. So in this particular case, if I were to go here, okay, if I were to go here, for example, using a bar replay, okay, so you see now on the 5 minute that this has been supporting for like literally 3-4 hours now, where it's moved, you know, where it's moved 4% in 5 hours. Pretty damn good. Pretty good ATR, right? And it's also broken above the previous high. So you know that it's going for a third wave. So this wave right here is the first wave that's forming. So because it's the first wave, you know with 100% certainty that it's now attempting a third wave going up. But the question is, where do you enter? Because you never caught this breakout right here. Definitely not. You're not going to catch it because there's too much false breakouts lately and you just don't know. So there's a good chance you'll just end up losing. So this is where the ATR comes into place, and it helps you with your stop loss and it helps you with your trailing stop. This is what every single professional trader in the world they will use. They'll use some method of volatility indicators, okay? Maybe not exactly the chandelier exit, but every professional day trader that trades in the $1 million range, I can assure you they'll use some sort of ATR measure. And what the multiplier is because it measures the average volatility in a range. And if you take the multiplier of it, it's going to give you a way of not stopping yourself out too soon in case a wick goes really far down. Does that make sense? Okay, I'm trying to explain it. I'm not really good at explaining it yet because I haven't had the opportunity to explain it to a lot of people. So let's just say now you establish that, hey, the 5-minute time frame looks really freaking good for the ATR because it's trending above it. It's got a steady volatility. So now let's just say it just keeps going and you say to yourself, I'm going to enter it next time it gets kind of close to there, as long as it bounces. Okay? Perfect. Now it bounced one time, and that what you do after the bounce is you buy it on the next breakout right here. Okay? Because you know that it's now very steady, you enter it right here. Okay? You enter the long position right there. Okay? I'm going to make this darker for you guys to see. This is where you enter your long position right there. Okay? And then your stop, your target is to be determined, right? A lot of people don't know their targets before they enter, including myself most times. So, did I change the bar replay? Okay, we'll just ignore the target for now. So then what you do with your stop loss is you set it slightly below. Okay? You enter there, you set it slightly below. Okay? So what a lot of people don't know is if you guys take a look here, okay, do you see the numbers 073, 044? I bet you guys didn't know that that's a percentage of the ATR that's on here. So for example, if you see here, let's just say I went to 3% right there. This is 171. I bet you guys didn't know that that's 3% of the ATR. It's taking that 0046 multiplied by 3 to give you the ATR range of a target. So if you set your stop loss slightly below here, there's a really low chance of you getting stopped out if the trend's going to continue. Okay? So then as it goes, you keep setting your stop loss higher and higher. Okay? You trail it. You trail it so that when it goes, your stop loss is now, so forget about your target now. So now your stop loss, it trails. See that? It goes up. It trails with the ATR, the chandelier exit. Okay? So it just keeps going. Let's just pretend that we're still going at it. So here, it looked like it was going to go down, but the volatility is still consistent. So why would you take your profit? You would actually end up riding this, okay? So you're still going to keep riding this, and your stop loss is exactly below the green line when the volatility changes. So that's how you know that you're not going to, that's how you ride to the maximum amount possible before the trend changes. How's my position doing? Damn, it's not moving at all. Okay, so now we're going up. Okay, it's still spiking. Still spiking. So now you're going to eventually see the ATR level out because the volatility is going to slow down. right? It's going to slow down eventually. It's not going to go up forever, right? But the goal is to find the best time frame. If you find the best time frame where the ATR is slightly touching the candles, that's your best bet, okay? That's what I recommend doing. Let's just zoom out a little bit here. You can even probably go to lower time frame here and keep it even more tight. So for example, the 15-minute was kind of high. You could have gone to even a 5-minute time frame, right? So you can keep your stops even tighter, right below here. So here, you got to make sure you give it one good candle. Honestly, it's got to close below. So in a 5-minute, this was only a wick. It didn't close below, so you don't exit it. So now the reason why I'm in this short position is because of the ATR is about to be broken. The range of the volatility is about to be broken and likely to go to the downside. So catching ourselves up, this is where we're at right now, okay? We're here. Now we're here in between. So right now, you should be out of a position already. Okay, you should 100% be out of position after entering here. So that's how 100% I would have played today, and I would have been up about 10% today. I would have been up over 10 grand, guaranteed. And then you take a look at alpha, same shit, guys. Look at this on the 5-minute. Okay, you guys probably you probably all missed this, like you probably all missed this part right there, right? But you enter it with the exact same way. After a breakout happens, you find an ATR or the chandelier exit that's supporting all of it. After the breakout and the first bounce, boom, that's where you enter it. So this one here, it kind of bounces there, tries to break out, it tests it, and as soon as it breaks out, this is where you enter it. Okay, then you ride this ATR until it changes otherwise. And then you'd be riding it to a change where the volatility changes at about 6%. And then this indicates for you to exit. So instead of going green, it's now telling you, the red is telling you that the ATR, the volatility has now changed from a bullish momentum to slightly bearish, right? Up 500, not bad. This is going to be a really good trade. I'm confident. If not, I'm going to stop myself out. I forgot to tell you where I was going to stop myself out. So I should probably go back there. So then because the volatility is about to change, I'm going to stop myself out on the 4-minute ATR here, slightly above. So now I'm going to ride it. I'm going to ride it down and assume that this ATR is going to change, right? And it's going to be consistently going to the downside. So anytime it gets above here, that's where I stop myself out. Does that make sense? So I'm also using a trailing stop as a resistance as well. So my trade that I'm taking right now is targeting roughly down over here for a 1% scalp. But if I assume that this is all the entire structure that's finished already, 1% is pretty prudent. So realistically, using just even Fibonacci, I would be targeting a supply zone. And that could be even down over here somewhere. Probably down over here somewhere. Yeah, probably realistically there. I don't know if I'll win the trade, but it's a good setup that I'm taking. I mean, the RR is phenomenal. The RR is over 2, right? So this one here, I will only lose about 1.5%, but I got a chance to win roughly 4.26. So that's a good trade in my opinion. I do admit I entered a little early though. So back to alpha, okay, you see that you would have taken your profit around there, but it starts to happen again, right? It starts to happen again where it's trending upwards and being supportive with a chandelier exit, right? So this is kind of a choppy movement, right? You could have entered it as soon as it bounced on here and kept riding it. Let's just say that there was a good 30 hours already, and then you ended up entering, okay? And you would set your stop loss slightly below it, and you would just keep riding it, right? Keep riding it until it changes otherwise. And boom, right here is where you would exit it because it notifies you that the volatility has now changed. So that's where you would exit. But of course, it didn't actually fall down below the green line. So because it didn't do that, it did complete opposite, right? It went above it instead, and this one was really, really hard. Okay, so this is where you get into even more advanced strategies, which I'm not going to get into today, but it has a lot to do with changing the multiplying factor of the ATR. So when there's more volatility, you have to give it less lenience to move. So you have to give it less margin to move, and you also have to adjust it to a lower time frame as well. So that's one way you could have, or many ways you could have caught it very, very easy on alpha today and on Kava. So that's kind of all that I wanted to talk to you guys about. That's why I started streaming. What is the name of the green and the red line indicator? That would be called the chandelier exit. I'm just reading some of the comments. Hold on, you guys don't see my screen? Okay, now you guys see it. Alright, so that's kind of all I wanted to talk to you guys about today. And I also wanted to tell you guys to make sure that you get a nano ledger, okay? Make sure you get a nano ledger. I really mean it. If you don't have a nano ledger, you're doing something wrong. If you're trusting exchanges right now, you're doing something wrong as well. I mean, think about how FTX literally fucked everybody over. Like Celsius, Alameda Research, 3 Arrows Capital. Every exchange has a reputation for screwing you over. So why would you even trust any exchange, including Binance, right? I'm getting into this because I just recently bought a new ledger, a Nano Ledger S, and I tried to move some of my crypto to it, and I forgot that it only holds 6 coins on there. So if you're holding a pretty big portfolio, you probably want to consider getting a Nano Ledger S Plus or a Ledger X. That's a much better investment. The only difference between the S Plus and the X is a larger LCD screen on the X and also Bluetooth capability. But who's really going to use Bluetooth and trust it, right? I mean, it's probably better to hardwire, right? And make sure you guys are taking the necessary steps to protect your ledger as well. Last thing you want to do is let someone have access to it and keep your PIN private. Never show anybody your seed phrase. I've known some people before in the past, and I've read on forums that when people buy a ledger, sometimes they get a ledger that's actually filled out already. Those ones, guys, are from scammers. If you have a ledger that's filled out, last thing you want to do is go to the recovery seed option, because that implies somebody activated it already and now someone else also has access to it. Always confirm that it's brand new when you get it. It's got to have 3 copies of the seed phrase papers, it's got to have the getting started, and it's got to have the documentation one. So it comes with 5 papers and a keychain. Make sure you don't get scammed, because it's really important to keep your crypto safe right now. So back to my trade right now. Nothing's gonna happen to it right now. But if you look at Kava, since I'm kind of live trading for you guys right now, like, it's solid. I mean, it's a solid trade, right? If it breaks upwards, all right, I lose 1.5. If I win, I'm gonna make like 10 grand maybe on it. Also, if you take a look at the moving average, okay, the moving average, have you guys noticed the 55 moving average ever since it finished this wave? Okay, so it finishes this wave, and then that one, and then now it's making the next one or whatever. Like, it could even be 3, 4, 5, but all that matters is that it bounces, it bounces, it bounces, it bounces. It fell through, okay, it fell through right here, and then it got back up slightly, and now we just can't get back up above the 55 EMA. So it means that because the bullish sentiment was for so strong and for so long, and if the 55 EMA is now broken, oh, you guys don't see this. Okay, right here, okay, the 55 EMA just keeps going, and then right here, we fall below it, try to get back up, but we just end up getting rejected. It implies that the bulls are getting really weak right now, and the volatility is over for this coin. So there should be some short-term correction coming up, and the only resistance right now is this guy right here. It's kind of like right here, in this range, okay? Always see resistance as a range. Don't see it as a hard number. See it as a zone. See it as like a supply zone. So you see this wick right here, okay? You see this wick right here that poked at the 55 EMA you see here. As soon as this is broken, it's just going to collapse. It's going to be like fireworks dropping to the downside if it does happen. You also see some other bearish indicators here for my trade where, well, the 30-minute time frame is really on a roll down. The 45-minute, keep in mind it's a lagging indicator, but nevertheless, they're still good indicators to show you what the momentum is like. And then if you take all of this out and you look at price action only, well, you get a series, okay? You get a series of bearish, doji, shooting star. This hammer candle was bullish, but we got a huge doji there, followed by an engulfing candle. So it's not that bullish to me anymore, right? On even different candles, you get a double doji. That implies that the bulls have tried for a while now. It's just not working out for them. So anyways, if you guys have any questions, please do ask. I want to answer a lot of things that you guys have that might want to know about. Also, just about indicators, okay? One thing I want to share with you guys about indicators is if it's sideways, your indicators are going to mean shit. Like your EMA, your RSI, your MACD. If it's sideways, it's not going to tell you anything. Your RSI is going to be between 40 and 60 or 70, whatever. Your MACD is going to be neutral as well, right? So you don't want to trade a sideways market. Some people love to go into a sideways market and then they'll wait there for a possible breakout. That can happen all the time. Like, look at Kava, okay? Look at Kava, what happened before this shit happened. This was not sideways, but, you know, okay, that's not a good example. Okay, let's just say we go to mask. This is pretty sideways to me. Actually, this is not really a good example for you guys right now. Okay, you can just say here, like, this is a sideways motion for like 2 days. You're not gonna, some people want to go into a position when it's sideways and hope for a breakout, but man, it's really difficult to put your money into something that may not happen. Does that make sense? You could have been missing other trade opportunities if you took a trade where you're waiting for a breakout and there's not clear signs. In my opinion, it's always better to let the volatility happen first. If the volatility happens first and the breakout happens, then you can say, great, wave one happened already. Kind of like alpha, right? The big wave, not a lot of people got into the trade over here, okay? Have you guys noticed? Take a look, okay, at alpha. Look, do you guys see volume here? Do you guys see volume over here at all? Look at the bottom, up until here. No, you don't see it. So that means that a lot of people will always miss the first waves going up or that form. It's easier to catch the next formation after you've identified the volatility first. Does that make sense? How do you think Bitcoin will finish, higher or lower? Okay, if we wanted to play a fun game where I had to guess what Bitcoin's going to do and I'm not held accountable, I'm going to say that Bitcoin's going to finish probably higher than 20,000. Probably maybe even close to 30 at the end of the year, but there's still going to be a major capitulation first. Because if we look at I don't have all my charts up, but if you look at the fair market value and how long it actually trends below fair market value, it trends there for a really long time before a bull market happens. We've also been in the longest bear market that Bitcoin has ever been in the history of crypto, over 410 days now. And because of that, right? Usually what happens is after we reach the bear market cycle bottom, which we don't even know if it's there yet, right? The bear market's defined by the top of the high, the all-time high, and the bottom, the all-time low, right? Until the bull market begins. After we reach the bottom, there's usually 300 to 400 days of accumulation. And we're not even close to there yet, right? So there could be a long ways to go. Not only that, the halving is like in May or June, and that's pretty far away. So accumulation phase probably won't begin until the fourth quarter of December 2014. Sure, we'll have these, rallies like Sol going up like this. We're going to have them all the time. We're going to have these miniature rallies. But if you look at the history of Bitcoin, and every single time that we've had a bear market, there's always been a major or a miniature bull run, right? Where people are like, yeah, the moon boys are coming in. Like, yeah, it's going to be great. And then we're going to rally more. Like, it's happened many times. Over here, it's happened where people thought it was the bottom, but it wasn't. Over here, it wasn't. These are all miniature rallies. And I'm certain that we're probably going to be bearish for a while. If you look at Bitcoin on the 2-day 55 moving average, we can't even get above the 2-day 55 EMA. And on the daily, like, we can barely get above that. So it just shows you, even on the 55 moving average over 55 days, that's how bearish we are. On a 200, we can't even get to an 8-hour, right? Since November, actually, what's the highest it's gone? It's gone to 12-hour. Yeah, pretty much it just nicks the 12-hour. That's the highest we've ever been. For a golden crossover, horrible. Like, we're not even close to there. Based off of ATR, okay, if you take a look at the ATR, there was a moment where I'm going to change my ATR range now to 3. Okay, so get rid of the 200 EMA. If you take a look at the ATR, okay, we have downtrended. So just following my basic strategy, you guys are going to be blown away by how simple it is, but it can get very complicated. So if you follow the bull trend with the ATR, okay, just what I was telling you earlier, look how much you would have rode it. You would have rode it until it fell down below and the first red shows, okay? So the first red shows right there, and that's where you would have rode it to at least 48K. And then the second one, if you were to enter a short position, you let it break first below. Okay, you let it break first. That's always the rule. You don't enter on the break. You enter on the retest of the ATR. So this is where a lot of people would have entered. This is where professionals would have entered a short. And if you entered there, there's not a single reason for you to close your position yet. Okay? You would have entered around there, and you would be up literally 63% right now. So based off of the ATR, the volatility is pretty consistently bearish right now, right? It's not positive. If you look at the ATR on the 2-day, right now, it's not. Every time it gets close, it tanks. So guess what I'm gonna do around 18,000, guys? I'm probably gonna short like $1 million because I have cash on hand right now. I have not all cash, but 80% of my money is in cash right now. I've liquidated my entire portfolio of over 7 figures. Not all, but like I'm keeping some major ones where I bought from a really low price, right? So 18,000 is, would you guys enter a short here based off of seeing how every time we hit there, based off of history, based off of inflation hikes right now, based off of the world economy just going to crap still, the housing crisis, I think it's probably a good bet, right? Not financial advice, but it's probably something you want to consider. I'm definitely going to load up on like $1 million of a short position and try to ride that to 14 or 12. Hello, ATR on the 4-day, you skipped 2 in between the up rally and the downfall. What do you do? Huh? If I have to spend too much time reading a question and I don't understand it right away, the best thing to do is just to skip it. So I think I'm going to end it here because it's a pretty long stream already. It's been 33 minutes and it's late at night. So I'll do more streams more often, guys. So thanks a lot for joining me. I hope you've taken something away from here. Next time, I haven't really streamed for the public in a long time, so I'm kind of lazy to answer questions. But I'm going to live stream more often and hopefully I can get a lot of these questions answered for you guys, all right? So have a good night. Thanks for joining me. Take care. Thank you.